Hey everyone, Barry Brooksby here. You might be looking at the infinite banking concept and wondering, how do you get a properly structured policy? This is really key. Not only do you need to have the right company and the right product, but you also need to have the right design. So I want to walk you through, what does that right design look like? In the foundation of all whole life policies, there's what's called base premium. And in an infinite banking design, you want the minimum amount of your premium going into the base. And the reason for this is because the base premium is purchasing the whole life death benefit. Now there is some base premium that's also going to cash value, but think about it like this. The base premium is tied to the amount of whole life insurance that you're purchasing. And in an infinite banking design, you want the minimum amount going into base so that you're paying for the least amount of life insurance. We're going to show that with $1 going into base. Now, most life insurance agents out there, they'll want to put all of your premium into base, or as much of your premium as possible, because as life insurance agents and advisors, our commissions are paid on base premium. So the more base premium you put into a policy, the higher the commission for the agent. The proper way to structure an infinite banking design is by adding a Paid Up Additions rider, PUA. We want the majority of your money going into PUA so that you maximize your cash value. This is the goal, maximum cash value. The more cash value you have growing in the policy, the better policy you're going to have, and the more cash you'll have available to use for the infinite banking concept. The key is to fund the PUA right up to what we call the MEC Limit. This MEC Limit stands for Modified Endowment Contract. You don't want to cross the MEC Limit. As long as you meet some criteria of not crossing the MEC limit, funding a policy at least 7 years, and keeping the policy in force until you pass away, all the gains, all the cash value growth, I teach you how to use all that money 100% tax-free. And the MEC limit is directly tied to the death benefit. Well, if we're minimizing the base premium to purchase the least amount of whole life insurance, how do we get the MEC limit higher so that you can get extra cash going into PUA? By adding a term rider to the whole life policy. So this is term insurance, and the term insurance rider might be on the policy for 7 years, 15 years, 30 years. It depends on how much premium you're putting into the policy. If you're doing any additional lump sums, your age, your health rating, those things come into play to determine how long we need the term rider. But by adding the term rider, it raises the MEC limit so that you can get a lot of extra cash into the policy. All that you see here, this is the proper structure for the infinite banking concept. When you have a whole life policy with a minimum base, maximum PUA for cash value, and the term rider, you can be sure that you will have the most efficient whole life policy out there for you to be able to use for the infinite banking concept. I would invite you to look at your own numbers. And if you have current life insurance policies now, I'm able to review those for you as well. Most policies, unfortunately, are not designed correctly. Look at your own numbers and see how a policy designed for the infinite banking concept really can become an asset to you in your financial portfolio. I also invite you to subscribe to the YouTube channel Wealth Optimized for more videos and educational content.